I was asked to make a video on trends by one of my subscribers. So in this video, we would be talking about trends, the types of trends we've got, how to put trends to our advantage when it comes to market prediction, when to buy and when to sell. So what are trends? Is basically the general direction of the market, and we have three types of trends. We have the uptrend, also known as the bullish trend. It's a type of trend where price creates series of higher lows and higher highs formation. We have the downtrend, also known as the bearish trend, where price creates series of lower highs and lower lows formation. And we have the sideways trend, also known as the consolidation trend, where price creates series of equal lows and equal highs formation. And these trends can be identified on any time frame: the 1 hour time frame, the daily time frame, the 4 hour, the 30 minutes, the 5 minutes time frame, 15 minutes time frame, even as low as the 1 minute time frame. We can identify trends on it. So on the volatility 101S index, the 1 hour time frame, we've got a trend which is an uptrend, where price has been creating series of higher lows and higher highs formation. So on this trend formation, price forms a low and a high, then proceeds to forming another low, a higher low, and another high, a higher high. So why is this low called a higher low, and why is this high called a higher high? When we check the value of the first low, which is this low, its value is 9,094, as we can see here. And when we check the value of the second low, which we called a higher low, its value is at 9,110. The price value of 9,110 is higher than the price value of 9,094. So that's why this low is called a higher low, because its value is higher than the value of the previous low. So coming to the highs, why is this high called a higher high? When we check the value of this high, the first high we got here, its value is at 9,144. And checking the value of the second high, its value is at 9,161. 9,161 is higher than 9,144. That's why this high is called a higher high. So price keeps creating series of higher lows and higher highs formation, and in this type of market, you have to look out for buy opportunities. This series of higher lows that is being formed shows that the bulls are in control of the market. That's why price is pushing to the upside. We have two market makers in trading. We have the bulls and the bears. Whenever the bulls are in control of the market, price pushes to the upside. That's when we get an uptrend formation. And whenever the bears are in control of the market, price drops to the downside, creating series of lower highs and lower lows formation. As you can see here, we've got a downtrend here. And to confirm the market trend, we should at least get two highs and two lows that are higher than each other, as I identified at this point. We got a high here, the first high. Price drops to form a low, then proceeds to form another high, a higher high, and another low, a higher low at this point. So we've gotten the confirmations that this market is in an uptrend, and I'm looking out for buy opportunities. All we need to do is to mark out the historical levels and zones formed in this uptrend. These levels can be a level of resistance, broken turn support. It can be a key level as well. So this level is a historical level which we've seen price sell on resistance here. We got the break, little buy support. So price coming to retest this level after this higher low formation. We have to look out for buy opportunities on this retest, and you can see our price bought after the retest of this broken level of resistance, turn support. This is the level. Then we saw price give the buys, and we have our next level at this point. In an uptrend market, you have to spot levels of resistance that got broken and retested on support for a buy opportunity. And we have this level as the next level of resistance formed, which we can still see the retest, the break and retest of this level. You can see how our price bought. We got the next level at this point, which is also a level of resistance. Got broken and retested, break and retest, price bought as a support. So that's how effective working with the market trends can be. Looking out for buy opportunities in an uptrend market and sell opportunities in a downtrend market. So let's proceed to spotting a downtrend market and see how we can look out for sell opportunities on a downtrend market. Let's check a different index, volatility 100 index. This is the 1 hour time frame. Let's go to a lower time frame, maybe the 5 minutes time frame. So on this 5 minutes time frame, we've got a bearish trend where price has been creating series of lower highs and lower lows formation. We've got lower lows at this point. This is a clear bearish trend. So to confirm this trend to be a downtrend, we have to first spot a high and a low, which should be lower than each other. So let's call this the first high and the first low at this point. Then price formed another high, a lower high, and a lower low. So this downtrend has been confirmed at this point by getting two highs and two lows that are lower than each other. And when we check the value of this high, we would see its value is higher than the value of the second high at this point here. So the value of the second high is 1614, while the value of the first high is 1639. 1614 is lower than 1639. That's why this high is called a lower high. Same thing is applied to the lows. The first low at this point, its value is at 1595, as you can see here. And the value of the second low is at 1584. 1584 is lower than 1595. That's why this low is called a lower low. So after confirming the market trend to be a bearish trend, we have to look out for sell opportunities, because in a bearish trend, the bears are in control of the market, which pushes price to the downside. To spot our sell zones, we have to identify historical levels formed in this downtrend, and we have one of those levels at this point, a level of resistance which we've seen past history zone. Price selling resistance the first time, second sells. On the approach of this level, we got sell possibilities, so we have to look out for sells, take a sell trade here. You can see how far price drops to the downside. We have our next level at this point, level of support, broke on resistance, getting past history, price buying support here, support at that point, the sell resistance, price came back and sold on this level. So imagine taking a sell trade at this point, working with this historical level and the market's trend, knowing that the market is on a downtrend, the bears are in control of the market. We have possibilities of the sell. You can see how far price sold to the downside. The next level we got is this level, which is also a historical level, a level of support that got broken on resistance. Same price, buy at this point previously, support, support, support here. There was a break of this level, as we can see price break below this level, give a retest of it, break and retest, and we got the sell. So imagine taking a sell trade here, scalping on this level as you're on the 5 minutes time frame, a lower time frame, good profit back here definitely. Price to came to give under a test of this level, which you have to take a sell trade, and boom, price dropped good. So that's how effective working with the market trends can be. Looking out for buy opportunities in an uptrend market and sell opportunities in a downtrend market, working with historical levels and zones. And like I said, these trends can be identified on any time frame, as I just did on the 5 minutes time frame, identifying a bearish trend. Yeah, so let's see if we can spot a consolidation market where price creates series of equal lows and equal highs formation. Yeah, I think we've got a consolidation market on this 5 minutes time frame, having series of equal highs and equal lows at this point. So in this type of market, you have to either buy or sell, selling on the equal highs and buying on the equal lows, a level of support. The same confirmation concept is applied by spotting two highs and two lows that are equal, then proceeds to looking at for trade opportunities on price coming back to these highs the third time. We got the first sells there, the first high and the second high, then the first low. Let's call this the first low, yeah, and the second low. So on price coming back to this highs the third time, you have to look for sell opportunities, and on price coming back to this lows the third time, you have to look out for buy opportunities. Because we've confirmed the structure to be a consolidation structure, you have to either buy or sell on these levels after the confirmation. So buying at this point, support, and selling here after the third sells, selling here the fourth time, resistance. Price couldn't come to this level the fourth time, would have still looked out for buy opportunity. So that's it, guys. That's how to work with the market trend when it comes to knowing whether to buy or sell, predicting the next market move. So for more educative contents like this, do what to smash the like button, drop a good comment on this video, and subscribe if you're to subscribe. And to my returning viewers, I appreciate your support for engaging in my videos. It means a lot, guys. Let's do more and do have a wonderful day.